Hello there, I hope that you're doing well. Welcome to episode 8 of the public Zeussy 2025 mentorship here on YouTube. During this lecture, I will share with you a market review on the index futures. As you've probably already heard in the news the past 2 weeks, there have been a lot of high impact news releases that have taken place. First of all, we saw the news come out about a Chinese super AI called DeepSeek. And secondly, we have seen President Trump held tariffs on Canada, China, and Mexico. Now, when it comes to these news releases, I want you to understand that these news releases get utilized to reprice heavily on the markets. What we will discuss during this market review is what we can monitor moving forward on both Nasdaq as the S&P 500. Here on the daily chart of Nasdaq, and what you can see is that Nasdaq has just been consolidating ever since the end of December right here. Notice that the market has been going back and forth inside of a pretty large dealing range. When it comes to this consolidation, you can see that there have been both runs towards the downside as runs towards the upside, followed by even more runs towards the downside. Notice, however, that these runs weren't sustained for a long period of time, and this is typical within a consolidating environment where you can see that the market is just going back and forth, back and forth, back and forth. And what a lot of people do wrong in an environment like this is that they try to hold on to one-sided biases for too long, where they're trying to say, okay, we have sell-side resting below these lows, so the market must be drawn towards these lows right now. Or we have buy-side resting above these highs, so the market must be drawn towards these highs right now. No, the market is simply stuck. And until if that tips its hand to you, you need to wait, and you need to wait for the underlying order flow to clear up. And when do we like to push it? When do we like to go out here and really lock in? That is when the underlying order flow is one-sided and when we can anticipate, all right, we're now in buy programs, so we can look for market maker buy models, or when we're in sell programs on the higher time frames and we can look for market maker sell models. If the underlying order flow is not clear on the daily chart, you need to utilize an hourly chart and hold on to a one-sided bias for a particular session. But once the session is done, you need to immediately wait for more market data. Now, when it comes to the levels which I've annotated right here, what you can see is that I've annotated the previous week's low and the previous week's high. Since we have just opened up a new week, these are the first two reference points which we have. Why? Because below the previous week's low, a lot of sell-side liquidity is engineered. And above the previous week's high, a lot of buy-side liquidity is engineered. So the moment every new week opens up, your eyes should immediately be drawn to where is the previous week's low and where is the previous week's high. Next to that, we have opened the month of February, and therefore we have more reference points which we can utilize. We can utilize the January low as the January high as important reference points for this month to come. Because below the January low and above the January high, a lot of liquidity has been engineered. So that means that throughout the month of February, IPTA will seek to refer back to these reference points. And the reactions to these levels will tell us the story when it comes to the order flow which is currently present. Now, next to that, what you can see is that I've annotated the December high. The reason why I've annotated this particular high is because this is the current all-time high on Nasdaq. This is the high of 2024 as well. Now, what it will be monitoring moving forward on Nasdaq is the following. What it will be monitoring is the reaction to this daily CB right here. Notice that the market wicked below that daily CB right here when the news of that Chinese super AI came out last week. And notice that we also wicked below it the moment that we opened up this week and the news of the tariffs came out. Now, when it comes to this daily CB right here, the reason why this daily CB is so important is because we utilized this daily CB right here as support on price to reprice higher and form the high of January. Therefore, I'm utilizing this daily CB as an inversion of value gap on price. The reaction to this daily CB right here will tell the story moving forward. If Nasdaq is going to continuously find support inside of this daily CB and we begin to see the signs present on the lower time frames of a buy program stepping in, then I anticipate that we're likely going to see Nasdaq draw towards the buy side liquidity resting above these highs. If Nasdaq displaces below this CB's range, utilizes it as resistance on price, then I anticipate that we're likely going to see the market draw towards sell-side liquidity resting below these lows. Now, when it comes to the current environment, please note that this is not the type of environment in which you want to say, I'm overly bullish or I'm overly bearish. because right now I'm simply neutral. And that doesn't mean I can't look for trade setups. It just means that I need to look for setups intraday, get in and get out, especially considering the fact that it's also NFP week. After week 1 of each new month, you're usually going to have way more clarity when it comes to the monthly profile which is in play. Because NFP, which takes place always during the first week of each new trading month, is the most important volatility injection when it comes to the monthly power of 3. When we pay attention to the RE chart then of Nasdaq, what I want you to see is the following. What I want you to see is that on this RE chart, I've annotated the previous week's low and the previous week's high. And next to that, I've annotated multiple blue boxes right here. Besides these blue boxes, I've also annotated the current week, new week's opening gap. This new week opening gap is the difference between Friday's close of last week and the Sunday open. Notice that there was a large difference between these two prices, and therefore this is our new week opening gap for the current week. When it comes to this new week opening gap, this is our main range to monitor for the upcoming days, meaning the reaction to this new week opening gap will tell the story moving forward, besides that daily CB of course. Notice that when we open up this week, we saw the market drop lower, and notice that we wicked below this blue shaded box right here. Notice, however, that the bodies kept on closing inside of it right here. This blue shaded box, guys, is the daily CB, which I've plotted on the RE chart as well. Notice how the market has been finding support inside of that. We opened up on Monday at the midnight open, and we saw the market immediately expand higher, drawing towards the higher end of this new week opening gap. What was the news utilized to make this possible? The news that was utilized to make this possible as a smokescreen was the fact that the trade war between America and Canada came to a pause for 30 days at least. Isn't it fun to realize that when we open up for the week, everyone was in panic due to that narrative of a trade war being in play, and by the end of the day, everyone is rather neutral because it seems like things have been sorted out, right? Guys, this is how they're utilizing news to reprice heavily. Because if you pay attention, the Nasdaq is moving around 600 points when it comes to the weekly open and where we formed the current high of week right here. Isn't that interesting to realize that they can utilize news to reprice from point A to point B? This blue shaded box of that daily CB, guys, has already been shown to you in episode 7 when I showed the swing trade which I took last week, where I went long on Wednesday right here from this blue shaded box, targeted the Wednesday high and pyramided throughout the London session right here. When you watch that episode, what you will see is that in the beginning part of that episode, I showed a clip of a market review which I made for my private mentorship students, in which I outlined already, alright, we're now in a buy program on Nasdaq. Why? Because the ranges which we're monitoring, this blue shaded box and this box right here, that daily CB, functioned as support on price. So that meant last week from Tuesday, we were looking for longs only for the week. Meaning we saw the daily low on Tuesday form inside that range to monitor. On Wednesday we saw the daily low form in that range to monitor. On Thursday we saw the daily low form in that range to monitor. And then we saw the market eventually expand higher beautifully, and it was a beautiful buy program that took place last week. When we pay attention to this weekly open then, what I want you to see is that we opened up this week and we saw the market drop towards that lower range to monitor. Notice that we wicked below it, but notice, however, that the bodies kept on closing inside of it. Monday opens up and we see the market immediately expand towards the upside, and it's drawn towards the new week opening gaps, its respective high. Now, what I invite you to do is I invite you to go to your RE charts on Nasdaq, and I invite you to investigate what this blue shaded box up here represents, and next to that, what these two black lines represent. Please go to the RE chart and investigate what these ranges are. I already outlined to you what this lower box right here is, and this lower box is of course that daily CB, but still investigate what these two black lines represent. And the reason why you need to do this is because if you want to unlock a great understanding of imbalance theory, you need to investigate what these ranges are. And I promise to you that when you investigate what these ranges are and you go back a few weeks, you are going to be absolutely mind blown by the level of importance of these ranges. Now, when we pay attention moving forward then to this new week opening gap, I need you to understand that this new week opening gap is the main range to monitor for the upcoming days. As outlined, it's NFP week, and the reaction to this new week opening gap will tell the story moving forward. If Nasdaq is going to continuously reject this new week opening gap, and we begin to see the signs of bearish order flow stepping in, then we're likely going to see the market be drawn towards the previous week's low. However, there's something very important which is in play when it comes to intermarket relationship, which we'll discuss in a bit. Because if we would see Nasdaq displace above this new week opening gap, utilize it as support on price, and we trade above the Monday high, utilize that as support on price as well, then to me, these highs of the previous week's high and the January high are way too smooth. Why? Because they formed around the 22,000 price level. So right now, I'm keeping a neutral stance on the index futures. And that's a result of the current market environment we're in. And that is something which you need to give yourself permission for as well. Many of you think that every single week you need to have a weekly bias right away. But that is simply not the case. Because some weeks the order flow is simply not clear yet, just like it is now. And that is why all we can do is wait for more market data and wait for IPDA to tip its hand to us. Now, when we pay attention to the daily chart of ES then, what you can see on this daily chart of ES is that ES has also just been consolidating inside of a very large range. Notice that the market has had multiple runs towards the downside and multiple runs higher, but none of these runs were sustained for a long period of time. Instead, we saw the market just go back and forth inside of a large range. Now, when it comes to the delivery that we have seen, what I want you to understand is that a lot of buy-side liquidity has been engineered above the December high and above the January high. However, notice that the market repriced heavily towards the downside last week when that DeepSeek news came out. Notice that the market was repriced into this daily BC right here. Why in particular is this daily BC so important? The reason why this daily BC is important on ES is due to the following. When you pay attention to the delivery which took place throughout the month of January, what you can see is that throughout the month of January, we saw the market drop lower and we saw a takeout sell-side liquidity resting below these relative weak lows. When you pay attention to time then, what you will see is that this was the December low. We saw the market trade into the lower end of this daily BC right here, annotated with this red box, and notice that we wicked below it. The bodies kept on closing inside of it. We then saw the market eventually displace higher on the day of CPI. Pay attention to the economic calendar when it comes to the big down close candles and big green candles which you're seeing. That's a tip for monthly profiles. We see the market displace through the yearly open with that imbalance, and we see it begin to run higher. The reason why this imbalance is therefore so important is because this imbalance is literally the final line of defense before ES turns very bearish. Meaning, if ES would displace below this imbalance, this blue shaded box, utilize it as resistance on price, then the January low and beyond comes to mind as draws on liquidity moving forward. And if that scenario is in play, then that means that we are likely seeing the original consolidation within a larger market maker buy model, which is going to take place within either the upcoming months or years. Because then all of this is simply the engineering of buy-side liquidity for a later point in time. However, it's not that far yet. The reason why is because we haven't seen ES displace below this daily BC yet. And therefore, as long as ES finds support inside this daily BC and we begin to see the signs of a lower time frame buy program unfolding, what that means is that we can monitor the market, its respective reactions to the BC above right here. If ES would get above this daily BC's range, above this higher black line, utilize it as support on price, then to me, new all-time highs for ES are likely going to be the play. Meaning that I anticipate ES to draw towards the previous week's high, draw towards the January high, and draw towards the December high. Notice how I'm utilizing if this, then that statements. That is how you align yourself with IPDA. You don't align yourself with IPDA by saying, oh, I'm now simply bullish or I'm now simply bearish because I see a discount array or I see a premium array get created. No, you need to monitor the reactions to specific levels to gauge the order flow. Now, when we pay attention to the delivery right here, what you can see is that we open up the month of February and we open up a new week as well. Therefore, I've annotated the previous week's low, the previous week's high, and the January low and the January high. Notice that ES took out the previous week's low. Here we're on the hourly chart of ES, and what you can see is that ES repriced last week towards the upside after we initially saw a heavy drop lower with the release of that DeepSeek AI news. Notice that this was manipulation so that distribution could unfold afterwards. When we were paying attention last week to that same daily BC, the moment that we displaced above it, I turned bullish on ES. That meant I was anticipating ES to find support inside of that daily BC's range of those two black lines right here. Notice that we retraced into the lower end of that daily BC, and notice that we wicked below it. Monitor, however, where the bodies are closing on this particular Wednesday, the day of FOMC. They kept on closing around 50% of that range. We saw the market eventually begin expanding towards the upside, and it was a very slow grind higher. Eventually we saw the market form the high of week inside of a bearish breaker right here. Why was this bearish breaker so important? Because when you pay attention to this bearish breaker, what you will see is that we have an imbalance, a low, and a CB, another imbalance, displacing through that low. Therefore, you know that this was an imbalanced price range. The moment that the market repriced into it, buy side was offered. And the moment that ES left the price range of that old imbalanced price range, the price range became balanced. And that is why you saw this very sudden repricing lower taking place. And isn't it interesting to realize that what they did the past day is the following. They literally took out all of the sell-side liquidity engineered the past week throughout this high resistance liquidity run towards the upside. Because when you pay attention to this delivery higher, you can see that you can of course draw a trend line like this, and therefore every single retail-minded trader was thinking higher on the indices. Now that we have seen this very large new week opening gap get established, I am monitoring the reaction to this range right here. Notice that ES took out the previous week's low and then quickly came above it again. Consolidation took place throughout Monday initially, and then we saw the market eventually expand higher, creating this RBC near the lower end of that new week opening gap. If ES would displace below this RBC, utilize this resistance price, then to me sell-side liquidity resting below the Monday low comes to mind as a drawing liquidity. If ES, however, is going to find support inside of this RBC and the lower end of this new week opening gap, and we would begin to see ES displace towards the upside, the moment that it displaces above this new week opening gap, the reaction to this new week opening gap will be very telling moving forward. The reason why is because when you pay attention to where this new week opening gap's high formed, you can see that it formed inside of that daily BC's range, which I outlined. And therefore, you can see that multiple things are aligning with each other right here that tell you that this is a very crucial point where ES is at now relative to the overall weekly delivery, which we're likely going to see. So on ES, I'm neutral as well right now, and the ranges which I'm monitoring have been outlined to you. And based upon the reactions to those ranges, I will be able to gauge the order flow, and I will be able to determine whether or not there's something to trade the upcoming days. Here we're on the hourly chart of both Nasdaq as ES. The reason why we're on the hourly chart of both markets is because we are going to be paying attention to intermarket relationship. Now both Nasdaq as ES should always move in tandem with each other. When they don't, and one market does something whilst the other market doesn't, that right there is something which we refer to as a Kraken correlation, or so-called SMT. Notice that when we opened up for this new week, which you can see by this orange line, we saw both markets drop towards the downside. Notice, however, that ES traded below this old low right here, whilst Nasdaq created a higher low relative to that low. Why is this low so important? This low is so important because it is the previous week's low. Remember what I outlined prior during this lecture, where I shared with you that the moment that a new week opens up, you should immediately pay attention to where the previous week's low and the previous week's high are, and then monitor the reactions to these levels to gauge the order flow. Notice that Nasdaq created a higher low, whilst ES created a lower low. Now by itself, this correlation means nothing. However, if we would begin to see the markets displace above the ranges which I outlined to you, and they begin to function as support on price, then that confirms to us that a higher time frame SMT is in place, and that would confirm to us that we're in fact in a buy program. And if that gets confirmed, that means that we can anticipate further repricing higher taking place. By itself, a current correlation means nothing. However, within an underlying narrative, it is exactly what you need to be monitoring. So pay attention to intermarket relationship. And this is something which we will discuss later during this mentorship more in depth because it's crucial. Since this week is NFP week, my focus is on Tuesday throughout the morning and afternoon session, Wednesday's morning session, and I will look at the markets again after NFP on Friday has delivered, and specifically after 9:30. I will skip Wednesday's afternoon session and I will skip Thursday completely. I will wait until after NFP on Friday and specifically 9:30 before I even consider looking at the markets again. I hope that you enjoyed this review. If you did, let me know. And I want to wish you good luck the upcoming week. Be safe.